Morning, everyone, and I do hope you had a great weekend and you are ready to start a new and productive trading week. Yes, so you have actually joined the discussion on the Swiss CPI economic data release, which is due in about 15 minutes. And as usually, I'm going to start with the fundamental part of the release, and then I will invite Alexander and Thomas to the whiteboard, who will continue with the technical part of this economic data release. Today we are discussing data for the month of March, but before that, let us have a look at the historical data on the Swiss inflation. Just give me a few seconds to put the chart on the whiteboard, and then we might continue. So here you can see what happened with this reading throughout the last 2 years. And if we look at the latest readings then, we do see that in February the inflation was at 0.1% on monthly basis, rebounding from a 0.3% inflation in the preceding month, which was the worst reading in 5 months. Now, getting back to this month, the average consensus forecast, as you already see at the chart placed on the top of the screen, suggests us that the reading will come out as 0.2% today, but let me put 2 more charts on the whiteboard. So this table shows us all the economist estimates for this release, and I'll put 1 more with the summary. So yeah, we do see that the median estimate is at 0.2%, while we do see that the forecasts maybe were not that unanimous, since the range of them is still 0.3%. But if we then again look at all of the 12 estimates that we have, that actually Bloomberg survey has, we do see that the majority of economists still think that the reading will be at 0.2%. Now, last thing that I am going to do is to have a quick glance at the Dukascopy fundamental analysis contest, where, by the way, all of you are invited to take part if you haven't done so before. Yes, this time the question actually was on the impact that this event might have on the Euro-USD currency pair. Just let us wait for it. Yeah, here it is. And what we can see from the chart I just put on the whiteboard, that the majority, or nearly 59% of community members, see this event having bullish impact on the Euro-USD currency pair, while 24 members have still voted for this event having rather bearish impact on the Euro-USD couple. But okay, now it's time to discuss the technical part. So Alexander is going to discuss the positive surprise trading strategy first, and then Thomas is going to finish up with the negative surprise trading strategy and market reaction. So guys, the floor is all yours.
Hello everyone, thank you Maya. So today we are discussing the potential impact of the news from the Alpine country, and if I'm not mistaken, that will be the first time we're discussing it on the daily news release. Therefore, I guess it will be pretty interesting to see what will happen. And if I recall correctly, Swiss inflation was rather modest during the last several months, and it has been a key concern for the Swiss National Bank. Therefore, the Swiss franc can be highly volatile soon after the release of the fundamental data from Switzerland. So the consensus forecast stands for the improvement in the inflation figures. Therefore, we should discuss the potential positive surprise trading strategy, and should not exclude that the data can surprise markets to the upside, and for example, we'll see an inflation around 0.3%. In this case, the Swiss franc will obviously appreciate versus other major currencies, and regarding the New Zealand dollar and Swiss franc cross, the pair will depreciate. And even though it's not one of the major currency crosses, still market sentiment and other indicators are pointing at pairs depreciation. Therefore, I guess it would be worth discussing the positive surprise trading strategy on this exact currency pair. So, as always, the entrance point at the market price, which currently stands around 200 million simple moving average, around 0.7670. Regarding the take profit, we recommend placing it around weekly pivot and the daily support at 0.7642, and at pips that will be just almost 30 pips from the market price. So, as already mentioned, the Swiss franc is projected to be highly volatile soon after the release of the data. Yeah, but I would also like to point out that another strong support for the pair is located around daily support and the recent low around 0.7647. So that also can be an alternative take profit. Regarding the stop loss, we suggest placing it around daily and 4-hour pivot point, and the level is 76.74, and in pips that will be just 4 pips, so just a couple of pips from the market price. So even in case of the worse than expected data, then the trading strategy is not very risky, and your losses will be limited. Yeah, as already mentioned, the market sentiment is strongly bearish, as more than 70% of traders are selling the pair, meaning that they expect the Swiss franc to appreciate versus the kiwi. Meanwhile, both currencies are sold in vast majority of all cases, and here we see that traders' attitudes towards the Swiss franc is strongly negative, as they expect the currency to depreciate versus other major currencies. And what is more important is the fact that vast majority of pending orders in the 100 pips range and of all pending orders are placed to sell the pair, meaning that even in a longer term, the Swiss franc is expected to appreciate versus the kiwi. And the last but not least, it's as always a table with technical indicators, and here we see quite a mixed situation, as indicators on the 10-minute and weekly chart are sending sell signals, supporting the case for pairs depreciation. However, in contrast, indicators on the hourly, 4-hour, daily, on 3 different time frames are suggesting that the pair will appreciate, and actually in this case the pair will follow the trend that started very long time ago, and actually since February the pair has been appreciating. And in the longer term, I would like to point out that the key level for long traders is located around weekly resistance and the recent high at 0.7736, while the key level for short traders, it's obviously the recommended take profit is 0.7641. Yeah, and I guess that will be pretty much from my side, and I'm giving the floor to Thomas, who will discuss the potential negative surprise trading strategy, as well as he will have a look at the market reaction. So welcome, Thomas.
Thank you very much, Alexander. Good morning, everyone. I hope you're having a great day. So let me just put everything on the whiteboard. So yeah, as mentioned, I will be talking about the possible negative surprise trading strategy. I'll be doing that on the United States dollar Swiss franc. Right over here, you can see 1-minute chart of the United States dollar Swiss franc, and yeah, despite the expectation actually being the results being slightly better, improvement in the CPI numbers. However, as recent data actually came out from the Switzerland slightly worse than expected, I decided to, and let's say as the usual case, there is some sort of correlation, momentum into this overall negativity and weakness in the economy. I decided to go with the negative surprise trading strategy, and United States dollar Swiss franc fits very well towards that. So yeah, so market sentiment is strongly bullish, so 70% of traders expect Swiss ground losing ground against the United States dollar, 53 to 63% of pending orders in 50 to 100 pip range around the current market price are actually set to go long. Nice typo here, I can see, or anyway, so yeah, besides that, Swiss franc is being sold in 70% of the cases, as Alexander mentioned, and United States dollar is being bought in 63% of the cases. Now, let's say overall attitude in the market is not unanimous. You can see that, for example, traders and clients of Honda and Saxo Bank have different attitudes. The community members of daily FX also expect appreciation of the pair, so actually we'll see how it works out. Now you can see that in the past minutes the pair has been relatively more volatile than usual. Therefore, I indicated few let's say these levels, and I guess we could add additional. Is it? Yeah, where's the color? Right over here. So yeah, what we're currently seeing is actually that the pair dipped still reached the daily low at 0.89092. Yeah, I guess you can't see. Let me. Anyway, right, I guess slightly better. So you can see the pair actually reached the daily low, 5-6 minutes ago, and initially as it was trading within the short term channel, actually following wedge pattern, I put the stop loss at the daily low, at the daily S2 at 0.8907 right over here, and take profit at the daily open at 0.8917. But we can see it might need some adjustment, and I guess therefore I would suggest to put take profit at the daily pivot point, which is 7 pips around the current market price at 0.8922 as a suggestion, and in such case the stop loss could be put actually as even at the daily S1 at 0.8912, but that's pretty much due to this, let's say, increased, but I would say even maybe abnormal volatility in the United States dollar Swiss franc case, which in my opinion is basically the result of the upcoming data release, and we don't really see usually these results. Right, so what we have now, technically, 2 minutes till the release of the data, and currently it is trading at 0.8914. Right, and we see the pair has lost, after touching daily open, the pair has lost 4 pips, and in the moment is approaching the daily S1. So for those expecting worse data, it actually was a great moment to enter the position. Right, so Swiss CPI actual 0.0 month-to-month. So yeah, we see what data slightly better actually than expected, but there is no result. In general, I would say what now? Right, let me just recap. So Swiss CPI on monthly basis, actual 0.4 and predicted 0.1. So we can see the pair is reacting, but the overall reaction doesn't even amount actually to a whole pip. And also Swiss CPI on yearly basis was slightly worse than expected result. So I guess the mixture of the two sort of outweighs each other, and we'll see it will be needed some time for the market participants to evaluate the strength and the impact of both of these. So I guess that would be pretty much it from my side. In let's say this medium to long term, I expect the pair actually to stay between the daily open at 0.8917 and daily S1 at 0.8912. I guess in 4 to 5, maybe 6, maybe actually up to 10 minutes, we might see this pure effect when the market participants clarify which number is actually of more importance. And yeah, that will be it. So I guess I will be leaving the screenshot of the market situation on the whiteboard with the data used in the presentation. Maybe it will be useful in the future, right? And yeah, now I remember that I forgot to put actually technicals. And yeah, most of them actually were pointing at further depreciation of the pair, I guess mostly due to this short-term channel, I mean falling wedge pattern. So as I mentioned, that will be all from my side, and I give floor back to you, Maya, to wrap it up.
Okay, thanks a lot, guys, for commenting on the technical stuff. So yes, this was the economic data release on Swiss CPI. In the meantime, I invite you to join the ongoing webinar, which is going to be broadcasted by Aslam Hamad, one of our community members, on the USD Canadian dollar support and resistance. And as well, be sure to join our daily research webinar at 12 GMT. So that's all for now, and see you later.